Big banks don't care about you. And this week only proved to me why it was important for me to look at other alternatives. And in my case, that was the switch to EQ Bank. And this week, I hit a milestone in my investing journey in my TFSA. Today, we're going to talk about both of those things. My name's Darren, and I created this channel to help out beginner investors because guess what? 20 months ago, that was me. And in that time, I built a portfolio that's worth $320,000 and growing. I've also got a large library of videos documenting everything from day one up to date, as well as a wide variety of different topics. So check out the video library. The most recent thing is me starting to build a covered call portfolio from scratch. So make sure you check out that. Let's get into today's video. Let's get into it. All right, so my portfolio is sitting at $168,545 as of today. The account consists of 4 separate accounts. That's my cash account, which is my emergency fund, my TFSA, my RRSP, and my RESP. But I do have a variety of other videos that cover all the other parts that make up that $320,000 portfolio. The reason that I started my channel was so you guys could watch me build from scratch my TFSA from zero to maxing it out, and that's what we're covering off here today. All right, so sitting in the cash account, we currently have $20,000, and that is my emergency fund. Everybody should have some sort of emergency fund. You have to decide what that looks like for you. In my case, I use Wealthsimple because I get a small amount of interest on that money, which is 3.25%. So every month I earn a little bit of interest to have that money sitting in cash, available, ready to use if there was an emergency. The kids' RESP is at $77,867. And by the time they graduate, they'll have about $472 to use for their education. And I did make a video on RESPs, and I'm probably going to do an updated version of that so we can talk about all that again. All right, so the accounts had about $62,291 in net deposits, which includes the grants that you get from the government. And you want to take advantage of that. The returns on the account are $15,575, and that's about 25% return. Since the last video that I posted, we'll go back in the activity tracker and we'll check out what's happened since then. So the last video was posted January the 1st. That's when I started things in the beginning of 2025. So we can see here that we are making our regular contributions. Every 2 weeks, I contribute to my daughter and my son. And right now that equates to $105 each. And then that money is reinvested, as you can see in the activity tracker. Now this is a robo account, so Wealthsimple does the work for me, and they do charge me a small amount of money. But for the grand scheme of things, I think it's worth it all around. I don't have to worry about it. It's kind of set it and forget it. And I can't manage it in any other way because they don't have a DIY version of it. All right, jumping over to my RRSP, which I don't really make any contributions to right now. It's sitting over the day up $254. Over the last week, it's up $19. Over the last month, it is down $253. The markets have been kind of volatile lately. Over the last 3 months, it's up $859. Over the year, it's up $3,547. And all-time returns on this account are $4,384. Now, this account is broken up. I have about half of it in USD and half of it in Canadian funds. And with the change in the president in the United States, that had a profound impact when Trump got in. Obviously, the Canadian dollar suffered, but all of the USD funds that I have within my portfolio have grown quite significantly. And I'm recording this right before Trump's inauguration, so we'll have to see what happens. I imagine there might be a jump in it again because, like I said previously, when he won the election, I didn't think that the account would grow much, but it most certainly did. All right, so let's jump over into the star of the show, which is my TFSA. Over the last day, it's up $600. Over the last week, it's down $210. Over the last month, it's down $770. Like I said, pretty volatile right now, so that's a pretty big drop. For the last 3 months, it's up $971. For the year, it's up $5,978, and all-time returns in the account, it's up $7,265. So it's really rolling along, growing quite significantly. Now, I said in the beginning of the video that I had reached a milestone. That milestone for me was to get that TFSA over $50,000. I've achieved that goal to date, and I'm pretty excited about that. If you watched my year-end video, you'll see that I set a lofty goal of trying to continue to put in the same amount of money that I did last year to grow this and max it out. I think it's pretty lofty for me to think that I'll be able to max out that TFSA in the next year. So we're just going to continue to keep putting money in and do our best to try and max it out, and we'll see what happens by the end of the year. All right, so in this account, there's only 56 cents in Canadian funds right now. And because it's a TFSA, I don't have any USD funds in here. Now, I do have stock lending turn on. Bit of a gimmick, I think, but there's a little bit of money that comes back. I've only earned $4.01, and you can see here CNR, Plaza REIT, and REI are on loan. Plaza REIT is got quite a few shares, but their share price is pretty low. Generally speaking, it's my understanding people are using these to short stocks and see if they can make money on it. But I do get paid a little bit of money at the end of it. So now we're going to jump into Passiv. Passiv is the tool that I use in order to track everything in one place. It's a great way to do all this stuff so that you don't have to be using spreadsheets or looking back and forth for accounts, because I have Wealthsimple as my main broker, and I do have an account with Questrade. And because I'm a Questrade user, I get this for free. But if you're interested in getting started using Passiv, I do have a video on it, as well as a link in the video description below, which will give you a rebate on the yearly purchase of using Passiv if you're interested. To date, I've had quite a few people use it, which is a great way to support the channel, because let's face it, a lot of us do this for the sake of sharing our experiences with others, and it does take a fair bit of time. So if you would like to help support that, go ahead and use that link and the other links below, which include EQ Bank, Wealthsimple, and you can use that to get yourself started and help support the channel. All right, let's have a look at what we're going to be buying this week. Of course, like anything, every week I drop $1,000 into the account, and lately I've been increasing that amount over time. So over the last few weeks, I've just steadily been adding, it's only a small amount, $1, but I figure $1 is going to help that portfolio grow over time. So this week we dropped $1,003 into the account, and there was 56 cents sitting there. So when we look at Passiv, we can see that the asset allocation in the account is accurate to 97%. Asset allocation is simply me saying I would like to hold a certain percentage of each of the securities within my portfolio. And of course, what Passiv does is it takes that percentage and then it looks at what money you have available and the stock prices of each of the securities, and it tells you what to buy based on that, so that you use up the entire amount of money that you've deposited in your account. Now, you don't have to actually follow this if you don't want to. For instance, if you felt that maybe one security was a better buy, you could do that. But of late, I've been following it quite religiously unless I see some other opportunities. All right, so from this, Passiv's made a number of suggestions in the account, and so we're going to go ahead and we're going to follow those suggestions in order to buy the different securities. All right, so the first thing it's suggesting we buy is 1 share of QQC. The next thing is 1 share of REI, 1 share of VFV, 2 shares of VRE, 5 shares of XEC, 6 shares of XEF, and finally 6 shares of XEI and 5 shares of XIC. So I'm going to go ahead, I'm going to purchase all those, and we'll jump right back things and we'll talk about this whole debacle with the big bank that I had. But before we talk about the debacle with the big bank, we're just going to go over the performance of the TFSA over the last 3 weeks. So that's from the 1st of January to the 19th of January, which is when I'm filming this today. So net contributions into the account are $2,339. And of course, it does track how many months you've been putting money in. Of course, this is just a short period of time, so we're 100% accurate on that. We can see that the total value of the account is the green line, the blue line is our contribution. So our returns are just above the blue line, so that's good to see that we're actually seeing some positive returns. Net change in the account in that period of time from the 1st to the 19th, $3,582, with a rate of return of 1.42%. And of course, the investment growth is $1,243. Like I said, the markets have been really volatile lately. They've been up and down. I've seen some pretty big swings in both the just specific TFSA and then obviously my entire portfolio. Now, because there's only about 50,000 in this count, those changes are pretty small right now. But in the entire portfolio, when there's a big swing in the market, I've seen big changes of upwards of $5,000 to $10,000 in my account, both negative and positive. So you just got to ride those things out. It's something you just have to sort of hang on to and get through. Don't sell just because you think that, oh my goodness, the world is falling apart. Statistically, it's shown that if you stay invested in the market over a long period of time, you're going to benefit yourself in sort of that passive approach to investing. All right, so the type of stocks and securities that I hold within my TFSA have varying times of payout. So there are ones that pay out every month, there are ones that pay out every quarter, and a couple of them that pay out twice a year. So January was a month where a lot of dividends flowed into the account, and you can see here that that totals $273 to date. This account averages somewhere around $50, although Passiv tells me it's $454. I'll be honest, I'm not sure where that came from. Roughly, it's $50, but of course it's steadily growing over time. And right now we're only looking at that January 1st to January 19th period of time. Because we're using Wealthsimple, we don't pay any commissions, of course, which is a nice feature for beginners to use if you're just getting started out, because if you're trading a lot, you're going to be paying a lot. You don't want to do that. You want to limit the amount of trades, but with Wealthsimple, you're limiting some of the costs that will come along with it. And of course, we can see here from the dividends that get paid out in that period of time, which one was the biggest one. It's XEF in this case at $73. The dividend income, as I said, for the month or in that period of time is $273. And now we'll just look at the overall performance of this account, all-time returns. All right, so the net contributions into the account are $49,290. I've been putting money in here steadily. If you look way back in April of 2023, you're going to see a blue line there. That blue line is withdrawing money. Something to remember about your TFSA is if you withdraw money from your TFSA, that money can't be used again until the next fiscal year. So if you're looking to take money out of this account, you should do it closer to the end of the year so that the reset happens when the new year comes around. In my case, I started with a TFSA because it's after-tax dollars, but it's easily and readily available to me if I need to have that money available. So we have our cash account set up as our emergency fund, but now that we're investing in here, of course, I could access this money if I really needed to. So it's kind of like a backup to the emergency fund if I needed to. Of course, we haven't had to use it. The only reason that there was some money withdrawn from that account when I originally started out is that I wanted to actually put that into my RRSP in order to offset some taxes, and I haven't done that ever since then. I know exactly how much money, staying consistent every single month when I'm putting money in there. Okay, so we can see by the green line, the blue line again is our money that's being contributed to the account. The green one is actually the growth in the account, and you can see that somewhere between October and November of 2024, that green line finally surpassed our how much money we're putting in. So the account is generating, that's that compounding going on, of course, as we have dividends and growth, it continues to grow. So it's nice to see that those lines are separating and we're seeing some real growth in that account now. Net change of the account, $51,693 with a rate of return of 17.78%. Now that's not to say that these returns will continue over time. Average returns sit somewhere between 5 and 10% in a stock portfolio. I bank on that sort of 5% return, and anything after that is absolute gravy. This last year has been absolutely outrageous from what everybody says and from what I've seen with the experience that I have. So will the remaining years that I have investing go like that? Probably not. So we're just going to stay vested in things. We're going to keep putting money in, keep growing the account, and get ready for retirement, which of course for me is about 9 years down the road. The investment growth, $2,403. Average dividends, there we go, is about $61. So it's slightly off. I said 50, but it's averaging about $61 from the time that I started that account in April of 2023. And of course, we can see that the graph shows where all the dividends are coming from. You can see, like I said, that the maximum was 273 in this particular month so far. It's our biggest one, but that's because a couple of these ETFs pay out twice a year, and it just happens that January is when that happens. And of course, if we scroll down, we can see where all the dividends are coming from. If you're really into dividends, this is where you'll see that information for you. Some people believe that dividends is the best way to go as far as investing. Others are skeptical about it. The dividend income in the account total is $1,337 all times on that account. All right, folks, I'm trying to squeeze this video in because we are actually leaving on our winter vacation in about 5 or 6 hours from now. I wasn't actually going to do the video before I left, but I've sort of said that I will try to put out roughly 3 videos a month, hitting, Monday's the day that I release them, but of course we're going away, so I thought I'm going to try to put this video together quickly so that I can actually have it uploaded. So when you guys see this, I'll be on vacation editing it, probably do most of it on the airplane, and then I'll have it uploaded ready to go for the next video. I'm not sure how that will work when I get back, if I can actually get another video put together. Obviously when we're away on vacation, I want to spend time with my family. So let's talk about the main topic today, which is when I said that, of course, I had this issue with the big bank, which relates to our trip. So we're going to an island in the Caribbean where we need some American funds. Now, if you go back in my video library, you're going to see a couple of videos where I talk about the big banks and, of course, my switch to EQ Bank and all the reasons why I did that. But the bottom line is that I've really come to the conclusion that the big banks, which are businesses, they have to make money. I totally get that. But this one really stumped me, and I just don't understand why big banks have to do stuff like this. So we needed to get some American funds, and with EQ Bank, one of the limitations is that you can't withdraw US funds. You need to somehow convert them unless there's a bank machine out there that will allow you to withdraw US funds. And where I live, I couldn't find one that would allow me to do that, so the only alternative I had was to withdraw cash. And with EQ Bank, if I take money, say out of TD, which was our old bank, and I use the bank machine, they charge you a fee. EQ Bank gives you that fee back. So as soon as it goes through, that gets credited back to your account. So there are no fees for me to withdraw that money, but then I had to convert the money somehow. So I went into the branch, which is the same branch that we had been previously using as TD customers. Now the irony to this is we're still TD customers for a few reasons. So the kids have a couple of accounts that don't cost anything. And of course, we also have our mortgage with them. And also we have our credit card with them. So we have 3 separate accounts with TD Bank. But for some reason, they didn't see that as us being customers. So I went into, spoke to the teller and said, this is what I'd like to do. I have some cash. I would like to convert it to US funds. The young gal was very helpful and said, I'll have to check with my manager, but I don't think that's something that we can do. She checked with the manager and came back and said, yes, I'm sorry, you need to have an account with us. Now, we literally just closed our checking account with them recently, and I had been a customer with them since 1991, but they didn't want to have anything to do with waiving any fees or keeping us as customers. They decided that that wasn't good enough, which is one of the big reasons we switched to EQ Bank. And in this case, they're telling me that I don't even have an account, so therefore they can't switch my money. They told me that fraud is a big deal, which I just don't get. At the end of the day, I have accounts with them. I'm not trying to commit any fraud. I literally wanted to convert funds, and if they had asked me to put my card in the machine, they would have seen our mortgages with them, our kids' accounts with them, and our credit card. And unfortunately, they didn't want to do that. So at the end of the day, it only affirmed to me why we had to make that switch. You know, investing is not just about the status quo every single year. Making smart decisions about what you do and planning ahead so you could reduce fees and have more money invested over time is the smartest thing to do. If you guys want to see why I switched, you should watch this video right here.